All right, guys, so we're going to kind of switch gears from loans, right? Because we were finding monthly payments and interest and all of that on loans. So we're going to switch from loans into credit cards, okay? Credit cards are kind of like a loan, right? But what kind of interest rates do you have on credit cards? A lot higher than a loan. Yeah. So we're going to look at like how they charge you interest on credit card statements as well. All right, so first thing, not required to pay the entire balance each month. You are required to make minimum monthly payments, and there will be finance charges for the remaining balance. Okay, and then we also have deducts money directly from your checking account each time you make a purchase. Which one's credit card? Which one's debit card? Good. Make sure we know the difference here, guys. Credit card is kind of like your own little mini loans that you're taking out every time you use it. Okay. Debit card, now the cards look the same. You can't always tell by looking at them. So like, but I mean, if I pull a card out, you're like, you have no idea if that's my debit card or my credit card. No. Um, no. But your debit card is that's actually money that you have in the bank. Okay, that's not a loan type of thing. That's pulling money right out of your account as you use it. Credit card is like racking up a balance. It's just adding on. You're gonna have to make payments to pay that off. All right, so there was something called the Truth in Lending Act. Bless you. This protects you if your credit card is lost or stolen. Okay, because it's real easy for people to steal a credit card and to use them, right? So you may be partially responsible if you lose your card, but your maximum liability is only up to 50 bucks. So you're never going to pay more than $50 if you use it or somebody steals it. The most you would pay is $50, which is good to know. But you are not responsible for any charges if you notify like the creditor, like if it's Visa, MasterCard, if you notify them before it's actually used by someone else, you're not responsible for anything. So as soon as you notice it's missing, that you lost it or something, anymore, like on my app on my phone, I can hit, pause my card or, stop the card so no one can use it. Or if you just call a phone number, let them know, hey, my card's been stolen. If you never find it, then yes, you would have to. Now, if you find it, fell between your car seat, seats or something, then you could call them back and be like, you know what, I found it, and then they'll stop that hold on it. Yeah.
Okay, so my sister lost stuff on Amazon,
Hmm.
and they stole her account.
Somebody, it wasn't Amazon.
Yeah, well, someone stole her like $1,000
She didn't pay anything, did she?
to get her money. They gave her money back.
That's good.
Paid anything, but like, how does that work? Like, what is the way to if someone takes something but you didn't?
That actually happened to me once. Yeah. Most of those places have insurance against that because, like, it happened to me years ago on eBay. Somebody hacked into my eBay account, got my credit card numbers, and were making charges on my card that I had on eBay. And eBay refunded all of the money onto my card, and then I just canceled the card and got a new one with a different number on it. So usually places like that will cover that for you. That's a good question. That's a good question. I have no idea. Oh, so they actually went after him. That's good. She should have gotten, if it was done through like eBay or something, they should have refunded that money. You should have. You should have. Hmm.
And then not even a week after that happened, my sister's car, someone from California sent her a check, a fake check that said that had 1,000 in
Yeah, don't ever. Yeah. No. Be smart about things like that. Or like I've been selling like things, online or whatever, and they're like, oh, I really want that. Like if I sold a car, like we really want your car. Like, is it okay if we pay you through like a money transfer and someone's gonna come pick it up for us or whatever? You're like, no, it's a scam. If anybody, it's a scam. Make them come see you in person and hand you cash. Don't ever take any of that other stuff.
job. She was making payments over the phone with credit cards. She lost her job
You got to be smart. If your like instincts are like, you know what, this is probably like it's too good to be true, or like this is probably it's probably a scam. That's dumb. Sure you did. Yeah. Did you enjoy that? Yeah, don't. Yeah. And you're like, if it's free, you don't need my credit card. That's when like, I need your last four, your social security, I need your date of birth, and where did you live growing up? Like, what were your previous addresses? Like, those are all things they ask you. Yeah. No. If someone calls and asks for your credit card, your social security, or any of that stuff over the phone, and you didn't call them, don't give it to them. Those are called phishing scams. Did you apply to win a trip? Did you put your name in a drawing somewhere? No, no, you didn't. Yeah.
With selling cars, I've accepted wires.
You're
But
nuts.
no, you have to do a bill of sale and fill out certain contracts, which basically means if you don't get your money, you cancel. But no, I mean, if you do accept a wire and they come from Florida, nobody brings $3,000 cash with them.
Yeah, they do.
Not if they have a bank in, if they have an independent bank in Florida.
Then they can get a money order and bring with them. I wouldn't take a wire transfer. I would not take a wire transfer.
Wire.
Yeah, I wouldn't. I don't trust. Mm. Not when it's talking that much money, like no.
Hold on.
Yeah.
Is that clearinghouse thing for real?
Publishers Clearinghouse? Yeah, that is actually for real.
Well,
That is a real thing.
I'll buy you $2.
Publishers Clearinghouse.
Yeah, like $1,000.
Advertising thing.
Is it $1,000?
Yeah. But that one is a real thing, but you have to like sign up to be part of that. Like you don't just automatically win and you've never signed up. You have to sign up for that. My grandma used to do that when she was alive. All right. Anyway, guys, the Fair Credit Billing Act protects you in case there's any errors in your credit card statement each month. You guys know that humans still input things, right? A lot of times. Humans, and we make mistakes sometimes. We transpose numbers. It happens, right? We all know we do. So if you notice there's an error on your statement, something happens, you are protected. You don't have to pay any finance charge or any kind of charges until all of that's been cleared up and resolved. So if you find errors, just make sure you say something, okay, that way you're not charged that. And then there is the Fair Debt Collection Practice. It protects you from collectors harassing you or using other means to collect payment. So like obviously they can call numerous times and ask you for your payments if you're not paying on something, and they can repossess vehicles and whatever you have a loan for or whatever, but they can't like harass you constantly and like whatever, send a big bully to your house to make you feel bad. Okay, they can't do that. The biggest thing, guys, honestly, if you're in a situation where finances, something happens and you can't pay your bills, contact the bank, contact the creditor, and just let them know. Okay, a lot of times they'll work with you and like work out a plan so that you can start paying them back again. But if you ignore them, that's when they get angry. Okay, they think that you're just never going to pay again. So just kind of contact them, reach out, be like, hey, I lost my job, I don't have money to pay for this, can we work something out? And then they usually will. Okay, so they want their money, so they're going to work something out with you, rather than you just being like, I'm never paying that again. All right, so number one, Frank lost his credit card at the local mall. He notified his creditor before the card was used. However, later in the day, someone found the card and charged $700 worth of hockey equipment on it. Luke, how much is Frank responsible for paying? Why? He told them before it was used, so he is responsible for nothing. There is math. Some of it's not. All right, number two, Jane's credit card was stolen. She didn't realize it for days, at which point she notified her creditor. During that time, someone charged $2,000. How much is Jane responsible for paying? $50. So, 50 bucks. Good. So, let them know as soon as, yeah, that's 50 is the max you're ever going to be responsible for. So, credit card companies.
Yeah, insurance.
That's why insurance rates are so high for those companies. Yeah. At that point, I would just cut it up and throw it out, shred it, get rid of it, and just use. Because she's at that point, she's already probably switched all of her things over to the new number on the new card, and just cut it up and let it go. Yeah. Don't ever just throw those away. Like, you guys know you have to like shred them and cut them into mini tiny pieces. I do the same thing. I put some in this trash can, some in this trash can, some in this trash can. but you never know, right? Like, I know I do the same thing. No. Luke can come and pull it out of your trash can and go use it for hockey equipment. Depends. People have ways, but people have ways around all of that, unfortunately. Okay, so here we go, guys. So, guys, so credit card billing is done on a monthly basis. So every month you get a bill from your credit card company that you actually, if you've used your credit card, you're going to get a bill every month. But interest rates are usually given as annual rates. So we need to convert them to monthly. I know we've done this one other time in here. So credit card companies issue a monthly statement. Therefore, APR must be converted to a monthly percentage rate. If the APR is 21.6%, what is the monthly interest rate? Just divide by 12. APR means it is annual. So we need to divide by 12 to switch that to monthly. All I'm doing is writing it as a percent, so we can leave it just as is. Now, you would need to switch that to 0.216 if you were going to actually multiply it and do stuff with it. We're just figuring out monthly then is only 1.8%. So if the APR is 18.6, what is the monthly interest rate? So 18.6 divided by 12 is 1.55%. Are we okay on that? Just taking the yearly, just divide by 12 to change it to monthly. And you think, oh, only 1.55%? That's not going to give me much of a finance charge. It still does. It still does. All right. So the next thing we have is the average daily balance. Devin, put it away. So the average of the amounts you owed each day of your billing period. So billing period is going to be a 1 month span. So what they do when they calculate how much interest you have to pay them, they find the average of all of your days. Because, if I use my credit card, like me, I use my credit card for everything, right? And I just keep paying it off because I get points and stuff build up, right? So like for me, like on the first of the month, if I've used it for like I went and bought groceries and then 2 days later I went and out to dinner, we used it, like I paid some bills the next day. Like, so every day that is changing, right? And if I make payments, I make payments every couple days on it. I throw cash at it to keep it paid off. So like my thing, it goes up and then it comes down and it goes up and then it comes down. Like mine's all over the place. So when they do an average to see how much they're going to charge you in interest, because obviously mine's changing every single day, they average every single day what that was by how many days in the month, and then that's what they charge you interest on. So your average. So you remember average, you're just going to add them up, divide by how many that you have. So Rebecca did not pay last month's credit card bill in full. Now the reason that's important that we note that, if you pay off your credit card every single month, you never pay interest. Okay? So like for me, that's what I do. I use it all the time, but I just pay it off before the end of the month. So then they wouldn't charge me any interest. Now if I don't pay it off, that next month is when all of those, I get charged interest on everything for the previous month. Okay? So if you pay it in full every single time, you never pay interest. If you don't pay it in full, that's when it starts adding up. So below is a list of Rebecca's daily balance for her last billing cycle. Find her average daily balance. Okay, now that's what most people want to do. Like, I'll add them up, divide by 5. No. So for 7 days, she owed $456.11. So I would have 7 of those. And then for the next 3 days, I'm going to have 3 of those. Do I need to write all of those out? What? I can just multiply. Yeah, so for here, I'm going to do 7 times 456.11. Right, because 7 days, that's where it's at. Plus, for 3 days, it was $1177.60. Bless you. This is me, then I'm going to divide by how many days in the month it was. But I need to figure out, because I have to add up every day for the month, right? There's more than 5 days in the month. Yeah, so here's the first 7 days. I just multiplying is just faster, right? And then here's the next 3 days. And then we have 6 days at 990.08 plus 9 days at 2115.15 plus 5 days at 2309.13. Let's see what we get. Right, this is me adding up every single day of the month. Now, type carefully, because you mess up one number, it's going to be wrong. Now, again, you are adding up every single day. Is that really how much she owes? No, that's just what it was for the days. So hang tight. Let's just add them all up first. All right, hopefully somebody else is doing this to check my math here. I have $43,248.05. You guys with me? Am I good? If you did not get that, you probably typed a number wrong. It could literally be one number wrong. But a couple of you got the same thing I got. Now, I have to find the average, so I have to divide by how many days were there in the month. What's 5 plus 9 plus 6 plus 3 plus 7? How many days was I looking at? That's 30 days. Correct. Could be 31. It could be 28 if it was February. It could be 29 if it was a leap year. Right. We'll talk about that later. All right. You guys with me? How I'm doing this, because I have to add up every single day of the month. That's why I had to do 7 times that number, 3 times, because I have to account for all 30 days. So I add up all 30 days. I know there's 30 because that's how many days they listed right there. Divide by 30. So her average daily balance, bless you, $1,441.60. Does that seem reasonable? Looking at all the amounts that she owed, that about her average was about $1,400. Yeah, because some of those were lower, and some of them were like up to $2,300. So she was kind of all over the place. But do you see why they do an average? Because it changes. I wouldn't want them to charge me on my highest one, right? So they're going to take everything you owed for the month, they're going to average it out, and then that's what they're going to charge you interest on. Okay, but we have to be able to find that average daily balance. Questions? Okay, let's try one more. I'm going to go ahead and do it up here. You guys do it on your own, and then we'll compare. Okay? All right, guys, take a look at yours versus mine. Should have gotten, when you added them all up, 16,122.31. And then when you add up all the days, it was 31 days in that month. Divide by 31, 520.07. Good? Or 5? Okay. So how does that help us find how much interest I have to pay? Putting all of that together. All right, so finance charges are not charged if the previous month the revolving credit card bill was paid in full, which I just told you guys, Luke, focus. If you pay your card in full every month, you will never pay finance charges. So that's good to know. You can use it if you're getting points, cash back, whatever, just make sure you pay it off. If your balance was not paid in full, they will take your monthly percentage rate and then multiply that by your average daily balance. Okay? So even if, let's say, you want to buy something large, big item, buying a brand new TV, whatever, you're going to spend like a big amount of money at one time, do it towards the end of your billing cycle. That way that large amount sits for like maybe a day, so it doesn't drive your average up a lot higher. Do you know what I mean? If you buy it at the beginning of the cycle and you're not going to pay it off in full, then that's going to drive up because that higher amount is going to sit there for the whole cycle. It's going to make that a lot higher. Wait till the end. If you're not going to pay it off in full, that very next one, then wait till the end. That way it doesn't sit in that billing cycle as long. Yeah. Mm-hmm. So like for my credit card, I get anywhere from 1 to 4% of everything I charge on my card. So like mine's through Costco. So once a year, they send me a check for the amount of money that 1 to 4% that I get on everything as that's accumulated. Kind of. Like they send it, I can literally cash it and just have the cash.
How much money are you making?
This is the first year that we've done the Costco credit card, and right now we've had it for about 6 months or so. Right now we've accumulated almost $700 in just free cash.
$700,
roughly.
But you still have Christmas that you're shopping for?
Right, and all of that I'm going to put on there.
So you might
Yeah.
be making
And that's all just free money.
Are you saving that?
We're going to use it to go to Disney this summer. Help pay for our Disney. Yes. Say that again. Gas. I don't know. Maybe. There's a lot of different credit cards that have different options. Like some credit cards give you mileage, so like you can use them for airfare. Capital One, yeah. So I mean, you have to decide what's important to you. Do you want cash back? Find a card that gives you cash back on things. If you're somebody who wants to like earn airline miles, find a credit card that gives you airline miles. So for her, that works out. Yep. Yeah, I had friends who they flew first class to Hawaii, him and his wife, round trip, because they just used everything on their card. That's awesome. Yeah, they do anymore. A lot of them do. All right, guys, number 7. Rebecca, from example 5, pays a finance charge on her average daily balance of $1441.60. Her APR is 18%. What is her finance charge for the billing cycle? So moving forward, like I will be giving you, here's, every day, like what their average, their balances were. You'll find their average daily balance, which we already did, right? This is from that last example. And then we're going to find her finance charge. So we're going to take the 14, if I can write up here today, 1441.60, and then you multiply that by her monthly percent. So I have to take her yearly and divide that by 12. So that's 1.5%. That's her monthly percent. So let me multiply that by 0.015. So 1441.60 times 0.015. So for that month, she would be charged $21.62 in interest. That is just for the month. So what happens is you don't pay that off. Every month, That's interest. Guess what? That gets added on. It's like it's compounded, right? That gets added onto your balance. Yeah, so that's why, like, the more you can pay off a credit card, the better, all right? Trying to lower that so you're not paying as much in interest. Are we doing okay? All right, so Sunny had these daily balances on her credit card for her last billing period. Since she did not pay the card in full the previous month, she has to pay a finance charge. The APR is 19.8%. So we have all of, for how many days where it sat at those different balances. What is her average daily balance? So starting with that, average daily balance, right? So 5 times the 354.59 plus 3 times 1246.54 plus 10 times 789.64 and 11 654.83. So finding that average daily balance, the same thing we were just working on. So adding those all up, we should get 20,612.10. You guys with me? Yeah, what you got? Yeah, no, that's just her average daily balance, right? That's that first part's all it asked for. Is that the average? Oh, wait, what do I have to do with that? Yeah, there we go. She doesn't owe $20,000. Good grief. Right? We just have to add up all of these. What do these all add up to? 29. February on a leap year. So divide that by 29. Good. That is her average daily balance. Okay? On average, that's roughly where it's at. So part B, what's the finance charge? Now, guys, look at your pink sheet. Look at your pink sheet for me. Top of your pink sheet, right? That's how you find finance charges. You see the bottom one says credit card? Look, it's on there. Monthly interest rate, converted to a decimal, times the average daily balance. That's what's right there for you, if you forget how to do this. So what is her monthly percentage rate, though? Good. So we have to take 19.8, divide it by 12, 1.65. They gave us the APR, which is annual percentage rate. And they're doing this by the month. So to go from a year to a month, I divide by 12. So the yearly is 19.8 divided by 12. That means monthly they're charging her 1.65%. Yeah, thankfully they don't charge 19.8% every month. That would be terrible. So to find out her finance charge then, we take her 710.76, multiply that by 0.0165. That's just for that month. So 710.76 times 0.0165. Okay, did you find it? So they're charging her $11.73. That's for the month. That month, when she gets her bill, she's going to have to pay $11.73 in interest because she didn't pay it all off last month. Okay. It's not terrible, but if you think about every month, if you keep not paying it off, that's going to add up. Yeah. So like if you have to like let something sit on your credit card for a couple months, is it going to break the bank? No. Okay, it's not going to be terrible. But obviously it's still you're throwing money away, right? Questions on this process? You good? All right. So you get that monthly credit card statement, right? It shows you everything that you've purchased. It's going to show you like your balance and everything. Like what all does it say? So an amount of time used for calculating your credit card bill, that is your billing cycle. Most of them are 1 month. Now, does 29 days truly mean that it was February on a leap year? Not necessarily. It's how they like running your billing cycle. It's usually roughly a month. So anywhere from like 28 to 31 days, roughly. All right. They will give you a summary of all of your credits and debits in your credit card statement. So it's going to show you every time you use that card. So then you can look back and be like, you know what? I never went there. I didn't buy that. Then you're going to know somebody probably hacked your card, stole your numbers, whatever. So you want to contact them. But always read through there, make sure like you are remembering and agreeing to everything. Okay. So a lot of vocab on a credit card statement. I think most of it's pretty self-explanatory. So it's going to have your account number. Obviously, everybody's credit card has a number unique to itself. It's going to give you your credit line. Credit line. So what's it mean if I have a $10,000 credit line? What's that mean? That's the max I can actually borrow, right? Or a max I can charge on my card. Okay, so that's the maximum that you could owe at any time, right? I can't ever go over that. It's going to give you your available credit. What's available credit mean? Good. That's how much I still got left. If I've already charged $2,000 worth of stuff, my available credit then would be $8,000, right? That's how much I can still spend. Should you spend all of it? No. You got to pay that back, you guys. Don't think because it's there that you have free reign to spend that much. Not a good idea. It's going to have your billing date, the date that the bill was actually written, because obviously they write it on one day, and then you may not. Now, technology anymore, you usually get them pretty quick, but like if they still mail them to you, it's going to be a couple-day lag in there before you actually get it. It's going to have your payment and due date, so make sure you have them turned in by the day that they are due. It's going to have all your transactions, listing where your purchases were made and what date they occurred. Debits and credits. Probably recognize those words from our checking stuff, right? Debits and credits. Any debits are charged to your account, credits are money you've paid towards your card. You made returns, so it went back on there, you made a payment, whatever. Previous balance, anything you owed before that you didn't pay off. And then payments and credits, total amount received by the creditor. So it's going to have those listed separately for you as well. So a lot of vocab stuff there, but I'm thinking you probably know what most of that stuff is. Yeah, there's even more. Oh, look, there's more. It has your new purchases, because obviously if you didn't pay it off last month, you're going to have that following through, and then it's going to be like, hey, since last month, you also spent another $3,000. So that's going to show you what you spent on this statement. Yeah. It's going to have any late charges listed. So if you paid late the previous month, they like to slap on, you know, $25, $35 late charges. It's not a joke. They really are pretty high like that. Finance charge. What's finance charge? Interest, right? Those words get used hand in hand. So that's like from the previous month, and like we just calculated the finance charges, the interest. That will be on there for, hey, this is what you have to pay in interest from last month that you did not pay off. So it's going to list that for you. Your new balance, so all of that combined, how much you owe. It will tell you your minimum payment. That is the lowest amount that they'll accept from you and say that you're okay. Should you pay just the minimum payment? No, please don't ever just pay the minimum. Now, if you're in a hard bind, pay at least that. Okay, try to scrape through enough pennies, pay at least that so they stay off your back and you don't get late charges. But if you're able, always pay more. Average daily balance, we just worked on calculating that. They will tell you what it is. Now you know how to find that. Number of days in your billing cycle, APR, your yearly, and then it will also give you your monthly periodic rate. Okay, so it gives you all the stuff we just talked about. So here's an example of what one looks like. So can you find all the stuff they were just talking about? Do you see where they listed everything that you use your card on? Yeah. Can we see the account number? What was the billing date? January 23rd. When's my payment due? February 2nd. What was my previous balance from last month? How much did I still owe last month? $150.50, right? You can see I made payments of $75. But I also purchased this month $284 worth of stuff. I paid it on time, so I didn't have a late charge. But I got charged $353 in tax or in interest, right? Because I didn't pay it off last month. So my new balance. Minimum payment of $20. Hopefully I'm paying way more than $20 to try to pay that off. They will list for you your total credit line. So I have an $8,000 credit line on this one. Available credit, $7,600. It's just the $8,000 minus how much I owe, right? I could spend another $7,600, right? There's my average daily balance, which we just worked on calculating. It says 30 days in the billing cycle. 18% is the yearly, which means 1.5 is my monthly. So a credit card statement's going to have all of this listed on it for you so you can see all of that. Okay. So, new purchase amount. I am not Jane. So to find the new purchase amount, you will add all new purchases for the billing cycle. Seems easy enough, right? Because eventually what we're leading to, you guys, you are going to be given pretty much a blank credit card statement. Thinking next project, even though some of you haven't done this one. Your next project, you're going to have to create your own credit card statement, and you're going to have to calculate every single number that was listed on there. Okay, that's coming, so keep that in mind. Oh yeah, they all keep going on, added on to the other one. Towards the end. No. New balance. You take your previous balance. Stop and think through this, make sure it makes sense to you. So how much I owed last month, my previous balance. I'm going to subtract any payments. Why am I subtracting my payments? Yeah, I'm paying off. So instead of owing $10,000, I paid $2,000, I only $8,000, right? You're going to subtract off because of how much you owe. But then you're going to add on to that any transactions, anything that you purchase. I'm going to add any late charges, and I'm going to add on a finance charge. So all of that gets added on because that's money I'm going to owe. All right? And then your available credits, how much more money can be charged to your account without going over your credit line. So I had a $10,000 credit line, I owe $2,000, I still have $8,000 to go. I could spend that if I wanted, not that you should. So your credit line minus the new balance, how you find that. So pink formula sheets, add this to your pink formula sheets. You could add it at the bottom, you could flip it over and put it on the back, totally up to you. Add this to your sheets. You are welcome. I'm letting you put it on here. Put it at the top, put it at the bottom. I don't care, wherever you have room for it. I would write credit cards, just how I have that written, and then so you know that's where you're looking for credit card stuff. New balance, previous balance, minus those payments and credits, plus transactions, plus late charge, plus finance charge. Available credit is your credit line amount minus the new balance. It's in your notes, hon. It is literally in your notes. You can look at your paper. But I'm letting you put this on your pink formula sheet so you have it. All right, guys, I have a little bit more I want to get through today before we're done. Yeah, Pascal. He's like the little lizard or chameleon on Tangled. Pascal. Pascal has a credit line of $15,000 on his credit card. His summary looks as follows. How much available credit does Pascal have? So if we look, and again, this is what you just added to your sheet. Available credit is I take the credit line amount. What's the credit line amount? $15,000. And I subtract the new balance. Does anything on here say new balance? The summary doesn't, but you have how to find the new balance. I take the previous balance, and I subtract any payments. I add the transactions. What's another word for transactions? New purchases. So I'm going to add those, add the late charge, and I'm going to add the finance charge. And that will tell me my new balance. Okay, so we're going to go through, and we'll just figure out what that is. Yes, means the same thing. All right, so that becomes $1,992.45. Guys, focus. Luke, give you writing utensil. Write it down. Do something. All right. So guys, in order to find our available credits, credit line amount, which they gave us minus the new balance, they didn't give me the new balance, but I had written down exactly how to find it. So then I'm going to subtract the $1,992.45. Good. So I still could charge $13,007.55. You're dyslexic. All right, but guys, I want you to stop. Everybody stop. I want you to logically think through this because I think we get stuck in a rut as math students that you're like, my teacher told me to do this, answer. Do you ever stop to really think and like reason through it? Like, you need to, okay? Does it make sense? Available credit, this is how much I could still spend. Well, if my max is $15,000 and I have a new balance, I have over $1,900 worth of stuff I've charged, does it make sense that I can still charge up to $13,000? Yeah, reason through this. I think too often we don't stop and really think through it logically. In the real world, logic, guys, gets you a long way. Logic gets you a long way. All right, number 10, Shelby has a credit line of $1,000 on her credit card. She had a previous balance of $545.60, made a $150 payment. The total of her new purchases is $239.56. What is Shelby's available credit? John, sit up, please. So again, what's her available credit? So right away, I'm going to go look at my pink paper that I just wrote this down on. Available credit. I take the credit line amount, which is $1,000. And I'm going to subtract her new balance. Do you know her new balance? They didn't give us her new balance, but I can find it, right? What was her previous balance? $545.60. Did she make any payments? 150. Subtract the 150. Did she have any transactions?
Yes.
Or new purchases? And add that, $239.56. Do we know any late charges or finance charges?
No.
Didn't say anything, so I'm just going to assume she doesn't have any. So that's $635.16. So that's what comes off of here, $635.16. You did. That's all right. $364.84. Again, talk to me. Stop paying attention to every little thing going around you right now. If you do not understand what I just did, you need to ask. Elena. Wait, what? I know, I'm confused. Because she already owed over $500 and she only paid off 150 of it. So then she bought more stuff. So she still owes from before and her new stuff. We have to take all that into account. Does that make sense? Okay. All right, last one I want to get through today, guys. 11. Alex has a credit card with a line of credit of $10,000. Nice job, Alex. You must be very responsible. He made the following purchases. We got a list of things. What's Alex's available credit? Right, so he doesn't have a previous balance. Like, we don't have all of that stuff. So we're assuming at this point, because they didn't tell me, that he didn't owe anything previously. So we're going to add all these up. Yep. So let's add all this up to see all of his charges. So we have purchases that totaled $4,344.99. Do you want the credit card to round up and say you owe more? I don't want them to round up. I'm going to keep it exactly what it is. Oh my gosh, you guys, stop talking. So he has a credit line of $10,000. He's charged over $4,300 worth of stuff. So he could charge up to $5,655.01. That is how much he still has available to him. Alex, I don't recommend you spend all that, okay? All right. Questions on all of this so far? Average daily balance, monthly interest rate, and figuring out available credit and new balance. Is all of this on your formula sheet right now?
Yes.
Yeah. So just make sure you use that, reference that.